Navigating the global trading maze, JP Morgan's perspective. The world of global trading is undergoing a seismic shift, and JP Morgan's Kate Finlayson is here to guide us through the complexities. As the focus shifts from global collaboration to national competition, trading desks are facing a challenging task, adapting to diverging policies and regulatory frameworks. But how can they navigate these turbulent waters? The policy puzzle. Global trading has always been a complex arena, but recent events have added a new layer of intricacy. The US is rethinking its trade stance, and leadership changes at top agencies are steering policy in new directions. Meanwhile, the EU and UK, despite sharing regulatory goals, are charting their own paths. Brexit has spurred the EU to foster investment within its borders, while the UK refines its regulations to drive innovation. Data discrepancies. The impact of these policy shifts is already evident. In the upcoming year, 2 bond consolidated tapes will emerge, one in the UK and one in the EU, each with its own disclosure rules. This will lead to information leakage, affecting liquidity providers' pricing strategies. Trading desks must decide between executing larger trades for deferred publication benefits or breaking trades to minimize market impact, each with unique cost implications. And that's not all. Managing data from multiple sources under different regimes adds operational complexities. Swaps in flux. The euro swaps market is also experiencing a transformation. EMIR 3.0 mandates EU funds to clear a portion of their EUR and PLN-denominated derivatives through EU-based central counterparties, CCPs, introducing new operational and reporting challenges. Additionally, the Dutch pension system's shift to a defined contribution model is expected to alter the euro swaps curve, reducing demand for long-dated swaps and impacting natural buyers. Uncovering hidden leverage. Policymakers worldwide are concerned about hidden leverage. The Financial Stability Board's recommendations include activity-based measures like minimum haircuts and central clearing. The Bank of England is studying these factors in the gilt market. And the US Treasury futures basis trade is under scrutiny. Trading desks must consider how these measures, if implemented, could affect bond pricing across markets. Capital reform's ripple effect. Bank capital reform is another critical aspect of market structure change. Adjustments to the US Supplementary Leverage Ratio (SLR) aim to support risk-based capital requirements, while the GSIB and Basel III proposals are anticipated to have a significant impact. The EU and UK, in response, have delayed parts of their Basel III reform to maintain competitiveness. With prudential regulation influencing risk and trading, this is a space to watch. JP Morgan's approach, staying informed, is crucial. And JP Morgan's global team is committed to helping clients navigate these changes. They assist in evaluating market structure shifts and their implications for pricing, liquidity, and strategy. By engaging with liquidity providers, trading desks can anticipate market movements and make strategic decisions. But here's where it gets controversial. Are these policy divergences a necessary evil for fostering national growth? Or do they create unnecessary complexity and fragmentation in global markets? Share your thoughts in the comments below.